Ladies and gentlemen, today's Marketing Monday takes us to the land of Seoul, South Korea, for a segment called Annyeonghaseyo, where we're going to cover what's going on. Now, it's a very important country to me. I spent a year there in my formative college years, and it's a beautiful city. But right now, it's undergoing one of the most insane stock market situations in the entire globe. People are frustrated. People are angry. This guy in a stock photo is looking quite stressed. And I want to explain why. Why is this bipolar stock market causing everyone to freak out in South Korea? And what does it mean for global markets as it goes forward? But first, I got to rewind the clock a little bit and set this whole thing up, okay? Because for the past 30 years, basically, the Korean stock market, AKA the Kospi, as it will be known throughout this, has been basically flat between this band of like 1,000 to 3,000, okay? This is the Kospi. It's been basically flat for 30 years. It's been a very unexciting thing to invest in. It's just been in this window. And so, actually, the degenerate traders of Korea don't even invest, for the longest time, in Korean stocks. Most of them come over here and invest in American stocks. And you look at this photo, this is important. You're gonna see a lot of ants in this presentation because, to make it simple for you, what we call apes, they call ants. Done. You understand? You're caught up. They're young, financially insecure, degenerate traders are called ants there. And it's because they see themselves as a small army. Individually, they have no strength, but collectively they can move mountains. And they want to fight the big Korean version of Wall Street type hedge funds and try to build something for themselves. They are ants. And for the longest time, flat stock market, they invested in US stocks. And they would say things like this, okay? Our parents' generation got wealth through the real estate boom of the Miracle on the Han River. Basically, when South Korea's economy started exploding, everyone who was an adult at that time, AKA boomers, were able to buy real estate, make a lot of money. Does this sound familiar? So they all got set for life, but it sort of entrenched this wealth gap. And now people who are like 36-year-old and younger now are like, how do I get my wealth? How do I afford a house? How do I get the safety and security of money? And so they take on more and more financial risk. This person says, Kim Soo-jin says, in my circle, about 30 people have already, quote, they call it graduating. It's basically you take riskier and riskier bets until you make enough money to get out of the cycle, to buy the house, to have a freedom. They call it graduate, and then you're out of the risky game. She's like, I want to hope to graduate one day. It's basically just going to a casino and hoping you hit it big. And so for the longest time, these risky traders would try to make their money in global markets, America or elsewhere. They would take these gambling bets everywhere until something happened right about here. What do you think happened right around 2025, 2026 to change everything? That's right, AI. People's desperate need to create images of Mario smoking weed suddenly started changing the financial realities of the world. Sam Altman, whose hands look AI generated in real life, rubbed his nipples with glee and got excited to buy all the memory in the world, him and his AI buddies. And guess, we've talked about this before, but guess where all the world's memory is basically made? South Korea. There's 3 major memory companies and 2 of them are based in South Korea. It's a generational windfall for this small country. These 2 companies are SK Hynix and Samsung. And so all of a sudden, it's like, wait a minute, all this money is pouring in from every company in the world, Amazon, Meta, OpenAI, Anthropic, everywhere, into these memory companies. And all this money's flowing into South Korea. And so all of a sudden, the Kospi goes from between 1,000 and 2,000 forever to hitting 3,000. For the first time in its history, it hits 3,000. Whoa, kind of a big deal for the Korean stock market. Everyone's like, okay, this is kind of cool. And then it hits 4,000. Wait, that was fast. It took 18 years to go from 1,000 to 2,000. It took 13 years to go from 2,000 to 3,000. It took like 2 weeks to go from 3,000 to 4,000. Wait, that's weird. What the hell? And Samsung and SK Hynix are just rolling in it. I mean, the demand keeps rising. All of a sudden, people look around, we're at 5,000. Wait a minute, the stock market of the whole country basically doubled in no time at all. This is January 2026. This whole thing started in late 25. And so people started to say, wait a minute, is the Korea discount finally easing? This is a financial term that basically said, like, if a company's listed in America, it's worth more than the exact same company listed in Korea. There's a Korea discount. It's the idea that people are afraid to invest in that market, or it's been flat for so long, nobody gives it. It's like, it's just not interesting enough. There's a Korea discount. But now it's like, maybe it's exciting now. Maybe the discount doesn't exist. And the growth of these two companies starts to have some weird effects on the way the Kospi, which is like kind of like their S&P 500, it's like the list of the biggest Korean firms, the way it's set up. So you look under the hood, and it turns out that half of the index is these two companies now. They've grown so much that it's literally these two companies is half all your investment and then everything else. Oh, by the way, in East Asian countries like Korea, red is good, green is bad for stocks. I know that's weird for our brains to comprehend. In this chart, it's not. I shouldn't have said that here. In this chart, it's not, but whenever they show it in their screenshots, like this, for example, red is good. Red is good on their screenshots. On my screenshots, red is bad. I'm sorry, you'll have to follow along. So it's half the index. And people are starting to go, wait a minute, is this a bad thing? We're starting to get really concentrated in all of our, national retirement savings and everything on just these two companies. And then everyone looks around and goes, wait a minute, we just passed the UK as the 8th largest stock market. It's awesome. Who cares? Quit being a party pooper. The line goes up. And then it's like, come on, bro. We hit 6,000. We hit 6,000. Quit fucking complaining. We're at 6K now. The entire country stock market has doubled in a few months. This is unreal. We did it. And by the way, every one of these screenshots, notice more and more celebration, more fireworks, more excitement. Things are getting bigger. But now it's like 6,000. Okay, guys, now this is getting really weird. Okay, we have to look around. Is this sustainable? Is anyone else worried? And then they passed Canada to become the 7th largest stock market. And it's like, who cares? We hit 7,000. Who cares? We hit 7,000. The party doesn't stop. Now we have balloons. Now we have balloons and falling confetti. Things are too good. Come on, don't be a spoil sport. And it's at this point when they've broken the unreal 7,000 milestone that the Korean government and their financial regulators introduce something that's going to be a bit of an interesting situation going forward. Once they hit 7,000, there's like so much interest in keeping this rally going. Everyone in the country is so excited at the sudden change of fortunes. Anyone who owns any stocks in Korea is feeling amazing, and anyone who doesn't is feeling a lot of FOMO. They're like, wait a minute, I want to be part of this. And they want to get on it fast. They don't want to start buying a few little stocks now. They want to buy a lot of stocks now to get in on this huge hype bubble. Maybe not bubble, I don't say that. This huge hype. And so right around when they hit 7,000, the Korean government starts allowing a thing called single stock leveraged ETFs. I'm going to explain what this means. And it's primarily for retail traders who are demanding it. They want it bad. They want a way to get involved on this stock market rally with a thing with leverage. So they allow it. What is an ETF? Simply an exchange traded fund. I'm gonna break that down in two parts. Exchange traded just means it's easy to buy in an exchange. You buy it like a stock. You can get on Robinhood or Schwab or wherever, and you can buy and sell it like a stock, but it's not a stock. What it is a fund. And a fund is usually a collection of stocks that express a certain idea. The simple way you guys can think about this is that the S&P 500 is an ETF, because it would be very hard for you as an individual to go buy the exact percentage of 500 stocks, okay? That's a pain in the ass. So you just buy one ETF that buys all of them for you, okay? And it tracks the results of that. It's a fund that's exchange traded, you can buy it, right? And it could be any idea. The fund can be any idea. Like if you really thought, you know what, AAA gaming companies are gonna be huge this year, but I don't wanna have to pick out all the right ones. I just wanna invest in AAA gaming companies. You could pick the Van Eck Video Gaming and Esports ETF. You'd lose a lot of money this year. But it would buy all of these companies for you. Do you understand? That's what an ETF is, right? It just picks an idea of companies and you invest in it like one click, like a stock. However, this is a little bit different. This is a leveraged single stock ETF. So instead of a basket of a lot of stocks expressing an idea, it's just one stock, but multiplied. Instead of buying Samsung stock, I'm investing in a 3x Samsung levered long ETF. And what that's doing is it's trying to provide 3x the daily return of Samsung. So you don't actually own any shares of Samsung. This is very important. The fine print here is you don't own any Samsung. You own a thing that tracks what it would be like if Samsung tripled what it did every day and tripled its losses every day. And the mechanics of this are very specific. The fine print is important. And most people that buy these don't really understand what's actually going on. It's very important that it says daily return. The important thing of that is if a stock, like let's say Samsung, is $100 on day one, then $90 on day two, then back to 100 on day three, then you would expect if I bought a 3x long ETF, it would have not moved. By day three, I should have the exact same amount as I started with. I lose 3x, I gain 3x. That's fine, but that's not how it works because it rebalances every day. So on day one, it lost 10%. So you lose 30% and you go from $100 to 70, 3 times the losses. Then it rebalances, okay? Then you're locked in. Then when it goes back, it's up 11%. Multiply that by 3, 32% on 70, you have $93. So the stock is flat, but you are down because it's rebalanced every single day. That's how they maintain it. Understand that if the stock is choppy, you are still losing money. You also have to pay them a small fee. So the only way that a 3x levered long ETF like this actually works for a retail investor to make money is if the stock steadily goes up day by day by day. It has to just keep going up. It has to be basically an unbroken string of green lights or red lights if it's, well, it's all confusing with the colors. But at this time, remember the confetti, remember the fireworks? Everyone's sort of seeing the green, everything's good. And so you get guys like this. This guy's gonna be a character going forward in this presentation. His name is Ho. He's a 24-year-old Korean university student. He did his 2 years of mandatory military service. He got some money from that. And he said, you know what? I got to turn this into house money. I got to make money for a house and find a partner and get my life in order. And so he said, what am I going to do? And he checked his phone and saw a tiny circle button that allowed him to unlock not 3x leverage, but 5x leverage. He wanted to go even bigger, bro. And he turned it into a 15x windfall because it kept going up. He made a lot of money. And if the story ends here, it's pretty good for Ho. Maybe the reason he did this is because of what this guy says. This is another Korean ant investor, Tony Kim. He's a father of 2, by the way. 34-year-old father of 2. Koreans, myself included, are obsessed with that dopamine rush. It's in our genes. It would be racist if anyone else said it, but he's Korean. But here's what I'll say. Maybe that's right. Maybe it's because the dopamine rush is in their genes. But maybe this guy clicked this little button because everyone around him was telling him it was a good idea. For example, the president of the country, Lee Jae-myung, literally went on TV and said, I'm selling my apartment to invest in ETFs. And he was super happy because the stock market surging was really good for his votes. Everyone in Korea was popping off. The stock market doubled. He's killing it. He's joining in. He's leading by example. And so a 24-year-old who wants to find money to get a house sees the president doing it and thinks, hey, it can't be a bad idea. So he joins in. Additionally, there's the pressure from the other side. There's the carrot and the stick. The other side is that Koreans, especially younger Koreans, are feeling that social mobility is slipping out of reach. This is a powerful quote. Many young people have little hope or expectation for the future. They're trying to find some joy or get some dopamine in their own way. So with this on one side and then respected people on the other side saying it's a good idea, it's easy to see how a lot of Koreans started piling in on this trade. And it tracks with other little things you're seeing in Korea. Like for example, maybe you guys saw this Food Never Comes app, which is a dopamine app where you order food, but it never arrives. It's just like the dopamine scroll of buying food. This came out of Korea. Korea invented dopamine apps for people that just want to pretend like they're. I tried the app, by the way. It literally gives you like a fake map. This is my real screenshot. I ordered bibimbap or something, and it's like order confirmed, but then it gets there and it's like there's nothing. It is kind of fun to scroll though. And then when you're ordering, you can be like, I want extra of this. You can get the guac, you can get whatever. It actually, I do feel the dopamine. But they have even more. They have like smoke a cigarette apps. They have a lot of dopamine apps. And you can see why in a society where it's like they're getting squeezed a lot and they're trying to find ways to add volatility or dopamine to an otherwise bad trend line. And anyway, all this stuff I'm saying is a little bit depressing. And why are we worrying about it? Because the Kospi just hit 8,000. Look how big the party is now. What was I talking about? Fuck out with dopamine. It's 8,000. Holy, it's gotten crazy. And yet some Eeyores, some spoil sports are like starting to get, I guess, bubble jitters. I mean, there's bubble balloons. I don't know what else. Bubble jitters, while others remain optimistic. 8,000, this is pretty crazy. At this point, over half the market is two stocks, SK Hynix and Samsung. But things are so good. A few people are looking around and being like, wait a minute, this doesn't seem right. This seems like too much too quickly. I don't think this is a normal level of advancement. But maybe we've just turned a corner. Maybe we finally figured this shit out. The Korean stock market no longer has this discount and we're getting our real true value. And anyway, who cares? Because we just passed India. We are now the world's, Korea, is now the 6th largest stock market. Holy, India is so much bigger of an economy and a country. But South Korea's stock market is now 6th in the world. This is unreal. And we hit 9,000. We did it, Reddit. This is Seoul Economic Daily. This headline's pretty important because 9,000. Now the party's massive. The whole country's basically partying. So many Korean investors have jumped on the train and bought into leveraged ETFs, bought into stocks, had their retirements up. They have a lot of money in the stock market and they're feeling really good. It's been rising and rising and rising. And what's more important is the rise of FOMO. Because anybody who's a dumb spoil sport like me, for example, and is like, oh, well, it might be a bubble, they're suffering. Chipless retail investors suffer. Anyone who even invests in the stock market but didn't invest in chips is losing. You need to be in this stuff because everyone around you is getting rich. And they're shopping in Gangnam, which is the wealthiest district in Seoul. They're partying with Psy, dude. Things are fucking good. You are broke. You're in Anamdong. And this is what the market looks like. It's unreal. It's surged to impossible heights. We're at 9,000. Can we hit 10,000? It has taken off like a rocket. Wait a minute, Rocket Money? Thank you to today's sponsor, Rocket Money. Before I tell you what happens next, I have to tell you about what's going on with your finances. You are almost certainly paying for a subscription that you don't need, and it's just draining out of your account month by month. But if you go to rocketmoney.com/big A and link your account, it will show you all of your recurring subscriptions, and you can one-click cancel them from the app. You can see everything you're subscribed to. Click, 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 and suddenly you're saving money. Rocket Money customers save an average of $500 a year, and they've saved over 7 million customers money. It is actually an incredible deal. rocketmoney.com/big A. Find some shit you're paying for you don't want to be paying for anymore. Click it, and they'll cancel it for you. It's great. I use it myself for a long time, and they've been a great supporter of the content. Thank you again to Rocket Money. But back to the content. We find ourselves here at 9,000, the cusp of 10,000. Some people are saying it's a bubble. And if it is a bubble and it was going to pop, it would still need something. I mean, it'll just keep expanding forever and ever until something pricks it. But what would that be? Like all bubbles, it has to have some event to eventually cause people to rethink what's going on. Otherwise, the euphoria continues and continues and continues. What would that prick be? Turns out in this case, it's a man called Xi Jinping. Or more realistically, the nation of China, because right after they hit 9,000 of the Kospi, and everyone is in absolute euphoria that the incredible days of money flowing in from memory will literally never end forever, China announces that they've started making their own homegrown lithography chip making tools, the kind that were previously only made by Dutch supplier ASML and that China didn't have access to. And so now there's this idea that these immersion deep ultraviolet lithography machines, these incredibly rare machines, again, China's still behind on these things, but they're farther ahead than people realized, which means in the near future, especially for not the highest end memory, they could be introducing a lot of new supply into the memory market. And these profits and these stocks are based on unbroken profits for the next 10 years. Like they value the future in that. And so all of a sudden people are like, wait. China's a lot closer on this than we thought. What if there's a flood of new memory supply in 27 or 28? That changes everything. And all of a sudden, all the Korean ants are noticing their incredibly levered bets dropping instantly. She broke her monitor. But this sweeps across the country instantly like a plague. The amount of Korean adults that were invested with leverage in the stock market is unreal. And they all get hit at once. At the same time as China announces a surprise shock to memory supply, SK Hynix, one of the key two companies of this announces less than perfect earnings. It was still very good earnings, but it wasn't like expectation shattering. And so everybody gets nervous at the same time and they start selling, and the selling compounds and it compounds and it compounds. And all of a sudden, $2 trillion gets wiped out of their stock market in a day. This is one brokerage in Korea, which has 880,000 clients. Half of them had losses in the same day. 70% of its 408,000 investors in SK Hynix also were in the red. Red in this case is bad. This is a Western publication. They all lose money in a day because they've all bought in during the rise. They weren't like early investors in Samsung. They were like recent investors in Samsung. So they're all losing. Remember this guy? Remember Lee Sung-ho? Lee Sung-ho with the 5x leverage who made generational wealth, 15x? Yeah, he's completely wiped out. All of his gains were erased in 4 weeks, leaving his account below his original investment. He had a chance and it was all gone. Newspapers in Seoul are putting images out like this. You don't need to read Korean to understand that a bunch of crying ants holding Samsung expresses the mood in the country. And again, the Kospi has what's called sidecars and circuit breakers, which basically means if the stock market as a whole falls more than 5% in a quick period of time, they freeze the stock market for 5 minutes. That's a sidecar. But if it falls 8%, they do a circuit breaker and freeze trading altogether. Okay, for a longer period of time. The Kospi plunges 8%, they get a circuit breaker. This is just the first day. This is the first day of the crash. 8% circuit breaker, huge drop. That's when people go, okay, well, this is not such a big deal, right? Everyone's gonna diamond hands and we'll bounce back tomorrow. The problem is, after just one day, millions of Koreans start getting what's called a margin call. Now, if you haven't seen the movie, I'm gonna explain what a margin call is for you. You don't have to watch Kevin Spacey. A margin call is the idea that the person that loaned you money to buy stocks wants that money back. They want to make sure it's safe. Let's say, for example, you have $5,000, but you want to buy $10,000 worth of stock. Well, you need $5,000, right? So you borrow. So it's your $5,000 and the bank's $5,000, but you own $10,000 of stock. That's fine. If the stock drops 40% to $6,000, what do you think the split is now? It's like the bank 3,000, you 3,000, right? Bank 3,000, you 3,000. It dropped 40%. That seems fair, right? You both take the... That's fine. Well, no, because you borrowed 5,000 from the bank, they want 5,000 back. And so actually it looks like this. You've lost all 4,000. They still want their 5K back. And plus interest, by the way. And so your $6,000 stock position is very, very close to being negative, very close to having nothing left. And the bank is worried that if this drops anymore, all of this green will get wiped out and suddenly it's them taking losses. And they don't want that to happen. So when it gets close, when it gets to where like they might actually lose money, like you'll be able to pay them back for the 5,000, they call you. They literally call you up. It's called a margin call. And they say this, give us more cash to top this up, to put a margin of safety in, or we're gonna sell all your stock to pay back our $5,000 debt. If you don't pick up, if you don't answer the phone, they just sell all your stock because they hold it, right? So they'll sell all your stock, they'll pay their $5,000 back. So here's the deal. 1 in 30 adult Koreans all get margin called on the same day. This is unreal in human history. No country's ever had this happen. 1 in 30 all get margin called. And so they all need to find new cash to put in, or the bank is gonna sell their shares to make sure it doesn't lose money on the loan it gave you. Because you're not good for it. You probably don't have the 5,000 to pay them back. So they need to sell these shares and get out. Most people, when margin called, don't have the money to top it up. So the bank is forced to sell to get its $5,000 back. What happens when 1 in 30 Koreans all piled into the same 2 stocks are all forced to sell at the same time? They're all selling Samsung and SK Hynix. This isn't just a retail trading thing. Margin calls happen to everybody. They happen to the biggest names in finance. Hedge funds get destroyed by margin calls. Anytime you take a bet with debt, you are asking to get margin called if it doesn't go your way. This guy, it's a whole different story that I'll go into in a different clip, but Leopold Aschenbrenner, the 24-year-old wonderkind who got billions of dollars and bet it all on AI and was mostly right, but he used debt, so he got margin called and lost it all in a few days. This just happened. It happens to anybody. If you get greedy enough with leverage, you can get wiped out because the bank will not wait for it to bounce back. They will just fucking sell it. So everyone is like, oh, fuck, everyone got margin called. The second day happens, and of course, it's a bloodbath. Sidecar, circuit breaker, everything plunges. Everything is being sold. Every one of these leverage trades is being unwound. The stock market is plunging. People are in a panic, dude. They're getting wiped out. Are you winning, Korean dad? Korean son, pack up your stuff. I just lost the house. Everyone is piled into this trade, and it's unwinding so fast. And again, most people did not get in here. They got in here. This is when the mania happened. So they're all underwater. The Korean government is getting on TV and like tearfully apologizing for ever introducing single stock leveraged ETFs. Even though they allowed it, they celebrated it, and they encouraged it on the way up. Yeah, the finance minister is apologizing and saying, oh, we didn't really understand that this would cause problems, even though everybody said this on the way up. And so they immediately, after 2 days, they moved so fast, they cracked down on all these risky retail funds. They've been cutting off access and trying to get people out of them and cutting off quickly. But these curbs do not save the investors that are already slaughtered by margin calls. Because again, once they margin call you, even if the thing you invested in bounces back, you've lost. They've sold everything. You're out. They have to sell it at the low at a loss to make sure they get the borrowed money back. And then the third day happens and it falls again. So now it's down, 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 and everyone's in a panic. People are saying instead of FOMO, they have JOMO, which is the joy of missing out. The few Koreans who didn't invest are like almost taunting the others that did. Because they didn't lose their life savings in this crazy turnaround. But there are others. Remember this guy again? This guy who lost everything? Well, there was one quote of his that I didn't include. He said, despite the painful loss, Lee says he plans to borrow again as soon as he gets enough capital. Some people don't quit. And so on day 4, people like this, along with some big investors who think, hey, this could be a buying opportunity, it's dropped so much, they start buying in. And all of a sudden, the Korean stock market has not just a little bit of a bounce back day, they have the largest single day gain in Korean stock history. They've had 3 of the worst losses days of all time, and then the biggest gain day ever. It's bipolar. It's insanity. The wild swings are causing everyone to freak out. By the way, red is good in this situation. However, if you zoom out, again, you have to understand the same thing with the leverage thing. If a stock falls 50% and then rises 50%, it's way down. You have to gain more than you lost to get back to even. And like this is the largest gain in Korean stock market history. It's still way down from the highs. So people are, it's not yet back, but people are like, it's a bipolar stock market. There's meltdowns and a record rally. They're having crazy days. No one can keep track of it. They're going from panic to euphoria almost overnight, which is like impossible for anybody to put their stability, their retirement into. And then we're caught up to live. Okay, that was the 4 days preceding today. This morning, the Kospi opened, and it opened with a record 20% drop in the first few minutes. It was a generational drop, and then it followed it with a almost equally as big rise. It is having massive swings in the same day now. A generational drop into a generational rise that did leave it slightly lower than it started. So the whole day was a small loss, which is not good for right now, but it could have been a massive loss. I mean, it's like you just can't follow what's going on. And at this point, as of right now today, the Korean stock market has become the most volatile stock market in the world. More than Pakistan, more than Bitcoin. You would have more stability putting your savings in crypto than in South Korea's entire stock market. It's gotten crazy, okay? And so we're caught up to live. This is the story of what's happened and why it's going this way. But I want to pull some lessons out of what we've seen so far. What are the lessons of this dangerous investing trap? If you as a retail investor are watching, a couple things you can pull from this are that leverage, AKA borrowing, AKA debt, plus big bets is an eventual disaster. It's mathematical. Eventually, you're gonna get wiped out, okay? It's like a casino doubling on roulette every time. If you're gonna gamble, you have to take your chips off or you will guaranteed get wiped out eventually. You can't let it run and run and run and run and run. It's not gonna work. Secondly, This is more to governments or people who are voters, which some of you are not. We have to think about bringing back post-Great Depression rules on debt. The access to infinite cheap debt to everybody is causing people to make really dumb decisions. Maybe I used to be a guy who was like, everybody should have access to whatever they want, and if you fail, it's because no crying in the casino. But here's the problem. Here's the problem, is that if enough people start crying in the casino, they tear down the whole casino and the world altogether. If we let everybody lose all their money, society no longer functions. We have to be more strict in people's access to making life-ruining financial decisions, like FOMO into 3x levered ETFs, because people are not financial professionals and they don't know the risks when they get in. They only see the upside. It's the responsibility of regulators to put a lid on this stuff so they don't lose all their money. The final rule, and this is a societal rule, is that economic pain like this will lead and is leading to political change. People in power cannot let people get fucked over like this so many times without seeing repercussions, and it's happening in Korea. Even though right now all the Korean ants are crying as they lose their savings, you're already seeing the next step. It reminds me a little bit of this crying and thing reminds me a little bit of the Odyssey, no spoilers, but the Odyssey poem, I guess, of the cows of Helios. It's like, bro, if you put a bunch of people on an island and you starve them, eventually they're gonna eat the cow. Even if there's a punishment, even if they know it's dangerous, they're gonna eventually eat it. And what's happening in Korea is people that are so pressured by not being able to get a rung on the ladder in society have begun to eat the cow. They've taken crazier and crazier risks. And when they get punished, they get furious. So this is what's happening today at South Korean Parliament.
Outside South Korea's National Assembly in Seoul, dozens of white funeral wreaths were placed along the pavement in an unusual and symbolic.
People are putting funeral wreaths outside the parliament saying basically angry shit about losing their money.
Protest by retail investors angered over the government's handling of single-stock leveraged exchange-traded funds. The demonstration came after a sharp stock market sell-off wiped out significant value from local equities, leaving many individual investors facing heavy financial losses. The condolence wreaths carried messages such as, "Retail investors are being driven to the brink," "Voters are being driven to the brink," and "Slaughtering retail investors," highlighting growing frustration with financial regulators and government policymakers.
And what I'm saying is, whether you think it's their fault, whether they should have taken the risk or not, if it happens to enough people, they will get angry enough to demand radical changes. And they may not always be for a stable society. Give me my money back is what most people are fucking demanding. And there are millions of them. My life is screwed. Korean investors stress after AI bubble bursts. South Korean authorities are scrambling to save the stock market from the AI bubble. The country has turned into a casino. Frustration with unfair society is driving angry young voters. The other party is leveraging this in Korea to say citizens are victims of our president's giant stock tip room, and they're surging in the polls. But finally, the South Koreans are not only yelling at the government, but they are starting a investor party, a ruined investor party demanding radical change. They're getting angrier and angrier. They're literally forming a voter block and refusing to buy any more stocks. So this debt and leverage hanging over everybody has eventual costs. The level of anger and criticism is at its peak. What happens next? I don't know. But I do know if they don't do anything about it, they're going to regret it. Those in power in Korea are going to see consequences. I do feel like consequences are coming. We'll find out more right here on Big A. I can't tell you what happens tomorrow. It could surge to 1 million. It could crash to nothing. But we're going to find out. I don't want to give you predictions, but I will tell you that whatever happens, you'll find out here. Thanks for watching. Appreciate you, and see you next time.